Welcome back to Trade 360. I'm Diane King Hall. Time now for the big three stocks, three charts, and three trades. Rick Ducat will take us through the charts. And here to take us through the trades is Dan Deming, managing partner at KKM Financial. It's great to see both of you, or it's great to be with both of you, I should say. Dan, let's start out with your big picture take on the market. We've been, kind of hitting record after record, but it feels like the air is thin up there. What's your thought?
Yeah, a little bit, Diane. I think we've seen a broadening of the rally yesterday, particularly, but now a little bit of that's being reversed today with the Dow and the Russell down as the NASDAQ and the S&P try to hold on the gains here. But, it's been a mixed bag as far as earnings reactions, but from the tech standpoint, certainly still strong. So I agree with you. It does feel a little bit like the air is a little thin up here. The expectations might be a little lofty. It's going to be interesting to see how the market reacts over the next week and a half as we get more and more earnings, if it's going to be able to hold these levels. To me, it feels like it's probably in a position where we might see a little bit of a pullback on exhaustion after the earnings announcements.
Okay, all right. So let's talk about the first trade on your list. You've got ANET on your list, Arista Networks. It's a little bit higher year to date. Where do you see it going from here?
Well, it's catching a bit again. I think it's going to challenge the highs at some point later this year, particularly maybe even after earnings next in a week and a half from now. But to me, it looks like it's still poised to go up and possibly challenge that 123, 125 level. And if not, if we see some weakness, the trade example set up today kind of allows you to capture upside with the opportunity to get put in the stock if we see some weakness.
All right. So, Rick, take us through what you notice about this chart for ANET.
Here's one where the horizontal levels stand out right away, and what I mean by that is that we have some notable gaps and price and points where price kept stopping repeatedly. So if we were to backtrack a little bit, we can see first we had the 98 level. That was the low point after this small gap upward here, but it also was a bottom point. It was a resistance point after the breakdown, resistance, and then finally support once again. So this is a key downside area. Right now it also happens to line up pretty closely with the orange 63-day EMA, so there's a bit of a confluence there of potential supportive behavior there. We can also see our dark green line here. This represents another gap. That was a low point before we had the gap down. That's around 108.25. Once again, a bit of congestion and resistance. We had a breakout. Now we've held on near that level. Also, this one, in this case, happens to match up with our very short-term white trend line here to the downside. So 108 is another possible breakdown point there. 21-day EMA is just below it in that case as well. Now, if we were to look to the upside a bit, we have our red line. 120. That's about where price stopped out several times there before that very brief gap to the upside. And then we have another notable high point there. That was our gap down. So 120 to about 128, 129. That's an upside area that would be of interest to anyone looking to trade on that side of the market here. We can also see RSI still moving upwards, starting to slow down a bit, starting to perhaps see a little bit of that bearish divergence where RSI trends down, price trends upward here, but pretty common as you head into earnings anyway, though, so perhaps not too much terribly to make of that. We can see now that the areas that we discussed earlier to the downside, those match up pretty closely with these heavy volume areas. So 95 to 100, heavy volume node there, about 105 to about 115, more heavy volume. So moves into or beyond those regions would also really stand out from a trading perspective.
Okay, all right. Dan, a quick final thought on your trade here, your approach here, before we move on to your next trade.
Sure, yeah, absolutely. So, yeah, the trade example today is relatively short dated, captures the earnings announcement. It's in August. It's buying the August 115, 130 call spread, but then selling the 100 put to finance a majority of the cost of the call spread. Allows you to basically do that for about $1 debit here. And so basically the metrics on this is anything above 116, you capture upside. And if we see some weakness, if we go down around 101 or just below that at expiration, you get put in the stock right around those levels, as Rick pointed out, between that 98 to 100 level. So again, there's two possible scenarios here, capturing upside, and if we see weakness, then getting put in the stock at a better level.
All right, let's talk about Hershey. Hershey is higher year to date. It feels like the price action is, in terms of year to date, similar to the movement that we've seen in the S&P 500. Is there a sweet path forward from here, Dan?
Possibly. I mean, we did see the pop last week, and to me, it feels like it's starting to gain some momentum after really struggling the last couple of years. It's a consumer staple. Certainly, I think, it kind of flies under the radar. It had been a very strong performer up until 23, I believe, and then it's kind of had some weakness. Some of the dynamics, obviously the price of cocoa and other things like that have impacted it. But I think it's getting over. It's got some pricing power, I think, now, and potentially we could see the margins increase. Now we get another earnings announcement here next Wednesday. So I think there's an opportunity here. And it also has a 3% dividend, so also generates a nice yield while, again, potentially capture upside.
Okay. All right. Rick, what do you notice about the chart for Hershey?
Yeah, an interesting breakout here, actually, for this name. So the overall broader picture here, more of a triangular shape in the longer term, because we have this downward sloping trend line starting at 208, connecting these highs here and here. But also in the much shorter term, you could argue that we had a significant low point near 150. If you were to backtrack, it's another of our gap lows here. From there, you could have also drawn across this area. So we had price gradually compressing in an increasingly narrowing range. Low volatility is often the precursor to high volatility. When the breakout does happen, it triggers the cascade of orders that can result in the runaway price activity. And we can see now 177, another gap level here, another resistance point here. We broke out of our triangle. We held the line at our purple 250 2-day EMA, and we pushed above 177. Once again now, though, like our last chart, kind of the horizontal areas are very prominent here. 185, our red line, that's about our highs. That was roughly matching up with some highs from back here, and that's about where we kind of came back to earth after that upside push there. Now, if we were to keep moving higher, the next notable high water mark there, about 193, 194, that general area would be a place to watch to the upside here. We can also see, though, that our point of control on our volume profile, the heavy trading area, is down here near about 169, 170. Lines up with a lot of our moving averages, our +1 standard deviation channel as well. That would be a supportive area to keep an eye on if you were interested in that type of trade here. And like I said before, 185 is our near-term resistance area. Lines up with our +2 standard deviation channel and our old resistance.
Okay, Dan, if you could quickly take us through your trade approach for this one before we get to your next pick.
Sure. Yeah, in this example, it's a buy right example, basically buying the stock. Again, I think there's going to be a trend now developing over the course of the next couple of years that Hershey goes through these cycles. So buying the stock and then selling the 195 call in September. So you got a little time here, but as Rick pointed out, to me, that is the next level that we could see Hershey's trade up to if we continue to maintain this upside momentum. And if not, then you get to collect the yield off the stock and also get a little bit of a premium from the call sale as we kind of wait to see how this unfolds over the next couple of months. But I do think that Hershey's has turned the corner now, and it does appear, I think, from a cyclical standpoint, it's got further upside over the next year.
Okay, and then Dan, take us through your final trade, your approach here for Veeva Systems. It's been an outperformer year to date.
It has. It's finally catching a bit again, and it's capturing some of the. I think it was viewed as a lagger in the AI space, but now I think it's starting to show that it's going to get pulled up with the rest of these companies. And so a cloud-based software solutions company, you're looking at it regaining its footing. And so basically I'm looking at a call fly here on the upside. For the trade example, the September 290, 310, 330 call fly. Capture further upside, basically get put it in around intrinsic value here around 290, and then have the ability to capture some upside over the next couple of months.
Okay. Rick, what do you notice about the chart for Veeva Systems?
Sure. So we can see the obvious breakout point here around 241. That was about where price topped out several times, had some trouble staying above it. This was maybe a little bit frustrating for the bulls because there was several times when perhaps it looked like the big breakout, the cascade of orders like I was talking about, was starting to happen, but price was retreating shortly after that. We held on near a pretty important point, though. Our pre-gap high point there around that 200 level marked a crucial line in the sand to the downside here. Now the price activity is something a lot of traders would be on the lookout for. We had a big gap up on a fundamental change, which was our earnings announcement here. We have seen a big push. We established a notable resistance point. We had a brief sideways to downward consolidation, not even really downward, mostly just kind of grinding sideways here. Never even really came close to retesting that 264 level here. Now price is making new intraday highs beyond that mark here. So that 291 level here stands out. If we were to keep moving higher, there is projected potential resistance here near our +1 standard deviation channel. Certainly doesn't mean it's going to stop there. It just means that's a relatively extreme point based on our price history so far here. Could be an area to watch. Also, we can see volume node lining up with 21-day EMA to the downside near about 281. That could be a point to hold if things retreat a little bit.
All right. Thank you, Rick. That's our very own Rick Ducat and Dan Deming of KKM Financial. Thank you both. Dan, thank you for your trades today. Appreciate it.